The sustainability of this whopping surge in Bitcoin will depend on a number of factors. The key ones include technological advancements, regulatory clarity, and investor sentiment. Investors have been buying Bitcoin on hopes that the SEC will approve ETF bids by BlackRock and Fidelity. This could bring new pools of capital into the cryptocurrency market from conservative investors. The SEC's approval of a Bitcoin ETF, the decision by the Securities and Exchange Commission to allow funds that track the current prices, also known as spot prices of Bitcoin, reverberated throughout the crypto market. Until now, the SEC has only approved ETFs that track the price of cryptocurrency futures contracts or invest in companies with indirect exposure to crypto. But BlackRock, the world's largest asset management firm and manager of the iShares family of ETFs, as well as smaller fund managers like ARK Invest and Bitwise and pure crypto firms such as Grayscale, had been vying for SEC approval of their Bitcoin ETF applications. The SEC's reversal was a victory for the fund managers who have been pushing hard to get their products on the market and will likely spawn a fierce competition among providers. Some of the new funds could be trading as early as Thursday, bringing mainstream investors into the Bitcoin market for the first time. But others worry that the new ETFs will flood the markets and land squarely in the retirement accounts of US households. Investors should remain cautious about the myriad risks associated with Bitcoin and products whose value is tied to crypto, SEC Chairman Gary Gensler warned in a statement. Other analysts believe the SEC's move is a sign that the crypto industry has finally matured to the point that the SEC is ready to approve ETFs that can track the price of the digital currency's actual transactions. Historically, the SEC has been reluctant to approve such funds, but that may have changed in 2023 after a federal appeals court ruled that its previous rejections of Grayscale's ETF application were unfair. Some analysts think the latest rally in Bitcoin is also driven by a fear of recession and a desire to diversify investments beyond stocks and bonds. As such, Bitcoin has become a safe haven for investors who are worried about losing money in traditional financial markets, and the upcoming launch of ETFs will give it even more legitimacy as an investment option. However, Kaiko research analyst Riyadh Carey notes that the recent Bitcoin surge is broader than just a response to these concerns. The Fed's interest rate hikes. Since their creation in 2009, Bitcoin and other cryptocurrencies have grown from digital novelties into trillion-dollar technologies that promise to disrupt the global financial system. But their popularity has also raised concerns over a lack of regulation and their use for illicit activities. Unlike the dollar, which is backed and regulated by the federal government, Bitcoin is decentralized and not controlled by any entity or group of people. Rather, its transactions are verified and recorded on a public ledger known as the blockchain. This makes it difficult for anyone to manipulate its value or hide their transaction history, which is why it has gained popularity among individuals and businesses alike as a means of conducting business over the internet. The blockchain's transparency has also raised concerns that it could be used as a vehicle for illegal activity, such as money laundering or tax evasion. But the blockchain's open-source nature means that developers and other participants can help to regulate the platform and ensure that its users are not engaging in any illegal activities. The blockchain also provides a way for law enforcement to track suspicious transactions. Bitcoin's recent surge is likely being fueled by a combination of factors, including the expectation that the Fed will hold off on raising interest rates at its next meeting in 2024. In fact, the central bank's latest statement suggested that it may already be done with rate hikes for now, noting that as inflation pressures have receded, policymakers can be more patient about removing accommodation. A pause in interest rates would make it less costly for consumers and businesses to borrow. This could give the economy a boost and lead to higher corporate earnings, which tend to do well in the immediate aftermath of a rate cut. The Fed has struggled to navigate a soft landing for the economy, bringing down inflation without tipping the country into a recession. But judging from its past actions, the current Fed team seems determined to give it another shot. Whether the attempt succeeds will largely be determined by inflation data and economic developments over the coming year. The upcoming launch of a crypto exchange-traded fund, ETF, The launch of the first Bitcoin ETF will be a big moment for cryptocurrency investors. For years, fans have hoped that such funds would attract straight-laced institutional investors and increase liquidity. They also hoped that the fund's approval might buttress demand for Bitcoin, as it has done with older speculative assets like gold. ETFs are investment securities that trade on regulated stock exchanges. They track the performance of an underlying asset, which could be stocks, a basket of currencies, or even a precious metal such as gold. These funds are popular among investors because they offer a convenient and affordable way to invest in a broad range of assets. The approval of the first Bitcoin ETF is a big deal for crypto enthusiasts because it will finally make it possible to buy and sell Bitcoin without having to go through the hassles of buying it directly. Investors will be able to purchase shares in the fund, which will then hold actual Bitcoin on their behalf without having to worry about secure storage or dealing with the risks associated with buying and selling Bitcoin directly. Moreover, the launch of the ETFs will allow investors to invest in Bitcoin through their existing brokerage accounts rather than having to buy and sell it through exchanges. This will open up the cryptocurrency market to a broader audience of investors, including those who have never before held crypto assets. In addition, the ETFs will help to establish a more mainstream reputation for crypto, which may lead more traditional investors to consider it as an additional source of income. Despite the excitement surrounding the ETF launch, there are still many uncertainties about how the market will react. For one thing, the price of Bitcoin is extremely volatile. It rose and fell by tens of millions of dollars on Thursday, reflecting a wild day for the overall market. The prospect of a crypto bank. Cryptocurrencies are digital tokens that allow people to transact in a decentralized way, bypassing middlemen like banks. In less than a decade, they've gone from fringe interests of tech evangelists to trillion-dollar assets with the potential to shake up the financial industry. But despite their popularity, many investors are still unsure how to navigate the crypto markets. One solution is a crypto bank, a new type of investment firm that holds digital assets and operates as a traditional financial services company. These companies offer a range of services, including storage, trading, and brokerage of digital assets. The idea is to provide a more comprehensive banking service that helps investors invest in and manage crypto assets. But there are a number of challenges that must be addressed before these banks can become mainstream. The first challenge is the high volatility of cryptocurrencies. No bank likes to work with volatile assets, and cryptocurrencies are no exception. This volatility has led to the collapse of a number of crypto firms, including FTX, which was once the world's third largest exchange. These failures have cost investors billions of dollars and have made governments skeptical about crypto's future. Another challenge is navigating the regulatory environment. Although some regulators have embraced the potential of crypto, others remain wary. Many of these regulators are concerned about the lack of transparency and the inability to enforce rules. In addition, they are worried about the potential for fraud and hacking. Consequently, these regulators are working to create regulations that can be applied to the crypto market. Finally, the prospect of a crypto bank is complicated by a lack of expertise in the area. Although some of the world's largest financial institutions have begun to establish teams to explore the potential of crypto, most are still in the early stages of development. This means that the companies are experimenting with different approaches to leveraging the technology and are still learning how to use it effectively. Ultimately, a crypto bank could offer a wide range of benefits to consumers and the banking sector as a whole. For example, it could help traditional banks compete with fintech startups by offering products that are more consumer-friendly. It could also ease the burden on inexperienced individual investors by acting as a trusted third party that can protect their assets.